Price is what you pay, value is what you get. I want to buy Tesla stock at a certain value. The price you pay for the stock really matters. I'm going to share the price I'd buy Tesla stock at, but first, let's analyze it together. So let's pull up Tesla in our Everything Money software, and I'll explain to you some of the reasons why I'm a little concerned. So first off, this is something I go to all the time. The price to sales ratio on Tesla is 7.5. Now, the typical car company is 0.5 to 1, to which a lot of the Tesla bulls out there and say, this is not a car company. Okay. Well over 85% of its revenue comes from cars. Looks like a duck, talks like a duck, walks like a duck. Guess what it is? It's a duck. Now, I'm not saying Tesla won't be something else in the future, but to value it today on a piece of the business that does not even exist, basically. Guys, FSD. Now, by the way, for the record, before the technology part was FSD. Now people are telling me, no, it's not FSD. It's the robo-taxi. Okay. Either way, FSD is expected to do $1 billion in revenue in this year, in 2024. Guys, the company itself did how much in revenue last year? $95 billion. That's about a little over 1% of the revenue comes from FSD. To me, that's the technology portion of the company. Now, robo-taxi, what is that? What does that even generate in revenue? Anything? Zero? Guys, if a high school baseball or basketball player is really, really good and you think they're going to go in the pros, you don't pay them pro-type money today. You wait. Do you make an investment? Do you pay a premium for them? Absolutely. Why? Because they have more potential than me in high school to going pro. So of course you should pay them more than you pay a guy like me. But you got to be ready to understand that Tesla right now is a car company with car company margins. Their gross margin is 17.72. I will tell you though, their profit margin is higher and their profit margin is getting better, which I love. That is a great part of the business. The numbers are getting better. Now, a little bit of a concern here is free cash flow of $1.7 billion last year, 3.6 in the last 5 years, versus $12.4 billion in revenue in profit versus 7.3 in the last 5 years. But guess what? Free cash flow has dropped a lot because they're investing a lot. So I'm not even criticizing them for this. Most investors would hate this. But I look at it going, no, hang on a second. Tesla's being smart. They're investing in factories. They're investing in moving the company to better locations. I do not criticize Tesla for that. In fact, I don't criticize Tesla for much at all. What I criticize the market is for possibly mispricing Tesla by thinking it's something it's not. Don't confuse disliking a stock with disliking a company. They're two very different things. Guys, look at this balance sheet. $720 billion market cap, $735 in enterprise value. That difference of $15 billion is essentially their debt. That is so incredibly low. Let's look at a company like Ford. Look at Ford, guys. $44 billion market cap, $240 billion enterprise value. That's insane. $200 billion essentially of debt. Let's go look at GM. Is GM any better? Nope, not much. $57 billion market cap, $237 billion enterprise value. Is Tesla better than these car companies? 100%. Absolutely. But I also want to remind you, as I said years and years ago, when people were saying Tesla's going to dominate EVs, they are dominating EVs, but people are starting to come up. Other companies are starting to come up. Tesla had to cut their prices 6, 7, 8 times in 1 year to get more people to buy them. Are they hitting their unit targets? Basically, with major discounts. I think recently there's the first time they increased their prices before the 7 cuts they did, or whatever the number was. So I look at that saying, guys, it's a great company, but don't mask yourself into falling in love with a product and saying, because of that, the stock is incredible. That is not the way to invest. The way to invest is understanding that most people either overpay for something or undervalue it. And if you're astute and you're able to handle the stomach of being wrong to the crowd, you might be able to do well. Now, guys, let's look at Tesla's 8 pillars. Things I hate. Increasing their shares outstanding by 12%. Now, somebody might argue, understandably so, Paul, if they're overvalued and they're issuing shares, isn't that good? Yeah, the argument can be made that it's good, because if they're undervalued and they're buying back shares, that's very good. But man, look at this. 5-year price of free cash flow is 200. 5-year PE, 98. The good news is this is a company that's growing very quickly still. So they can still drive that revenue and that net income and that free cash flow big time to make these high multiples a lot lower. They've done it for the last 12 years. But don't forget, everybody who loved Tesla, they don't realize that Elon Musk came out later and said, yeah, we were 2 weeks away from bankruptcy on several occasions. Guys, this is at a time when people were thinking that Tesla was going to the moon, and he was like, yeah, we were a few weeks away from bankruptcy several times. This is what I'm trying to teach on this channel. What I'm trying to teach is a process in which you take the emotion of a love for a product and you remove yourself from it and say, what does this company say to me? What am I buying? What is going on here that makes me an investor? Or somebody says, I'm going to wait a little bit longer. I just bought a Cybertruck. Guys, I love the Cybertruck. My wife loves the Cybertruck. We're getting it wrapped in white next month. We're so excited to have it. It's a lot of fun. I drive it pretty much every single day. Now let's go see what the analysts are saying about this company. Pretty good growth. $2.38 per share, growing to $6.38. Look at this. 35, 25, 30, 21% EPS growth. Revenue growth going from $100 billion this year to $205 billion. That's doubling in the next 4 years. Also great growth. But I want you to be the kind of person who says, I'm investing for longer than 4 years. That's hard to do. I see it all the time on Twitter. People saying, I'm a long-term investor. My stocks were down 0.4% today, which is better than the market. It's like, what do you care? I literally don't even check into my stock account. I buy my companies for 10, 20, 30 years down the road. You might find that hard to believe, and doesn't mean I'm going to keep every company that long. But I will keep the companies as long as my thesis is the same and the company's getting better. That's the goal here. Now, there's a lot of stuff I've gone through here. And we have a lot of people in our community that talk about Tesla a lot because not everybody in the community agrees with me on Tesla. There are people in our community who say, no, Paul, it's more than a car company. And I don't disagree to a certain extent. It's not there yet. And this is why having like-minded people is so important. Not in a sense of everybody agreeing with each other, like-minded in how they think and analyze. Because if you analyze and you think, if Warren Buffett came tomorrow and said, Paul, Tesla's a great purchase, I'd be like, oh, well, let me hear this out. Doesn't mean I'm going to buy it, but I respect the guy and I'm going to listen to him. So with the like-minded thinking that occurs in this group, I'm going to listen to a lot more people than some 17-year-old pimply kid who just whose dad has a Tesla and he thinks it's the greatest thing ever, therefore you should buy it. Now, if you've tried to go to our website to buy the software, I'm sure you noticed that we only have a limited number of daily spots for the software and community. And the reason for that is the software as it exists today currently includes everything we have to offer for stocks, retirement, and real estate. It's in all of these tools that we have today. But we now have 4 YouTube channels. And behind the scenes, we're making some really big and very good changes as we continue to expand. These offers very soon are going to get separated, and the current offer of everything is going away. Now, you may remember when we first started the channel, I built the software just for myself, and it was users out there requesting to use the software that made me go, maybe I should make this for other people as well. I use it to make better decisions in all aspects of my money and investing. I use this software every day. Now, as our channel and community have grown immensely since the beginning, it has to become less about me and more about how I can better serve you and our community members. So the good news is these changes haven't been made yet. So if you join today by clicking the link in the description below, you will be grandfathered in for life with all of our data and all these tools, plus every future tool that we make. You'll get all of it, and you'll stay in your pricing tier forever. This is the best deal we've ever offered. So if you're serious about making better financial decisions, probably increasing your returns and sleeping better at night, click on the link in the description below. Take advantage of everything we have to offer, and I'm very confident you will love this decision, and it might be one of the best decisions you make all year. Now, typically in videos, I'll sit here, and the reason we talk about Tesla so much is because it's a popular company. It's part of the Mag 7. Now, if you guys remember, there was a term in 2013 that some people say Jim Cramer came up with. Another person came up with it, but he made it really popular. It was for Facebook, Amazon, Apple, Netflix, and Google. Tesla was not part of that. But now we have the Mag 7, the Magnificent 7. Tesla is part of that. But the ironic part about all this is Tesla hit an all-time high back on November 4th of 2021 at $414 per share. Since then, revenue has doubled. Almost doubled. Profit has gone up more than 2 times, and yet the stock is down. It is currently at $206 per share. a little bit over half. Why? Because in the short run, stocks are a voting machine. In the long run, they're a weighing machine. What I want you to do is to change the way in which you think. Have a paradigm shift in thinking where you're able to sit there and say, just because the stock goes a certain direction doesn't mean it's correct. Doesn't mean the market's correct. It could just be an emotion, especially for these big companies like the Mag 7 or the FANG stocks. And this company, Tesla, in a stock sell-off, will be hurt hard because it's one of the biggest companies, and it was so speculative in nature, in my opinion. We're going to do the stock analyzer tool here shortly, but that's something I want you to remember when investing in this company. It's important to keep a good margin of safety for these kind of companies that might be a little rich, that are high flying, that are moving a lot and highly volatile. So let's pull up our stock analyzer tool. Let's pull up Tesla. And guys, instead of doing 3 assumptions, I'm going to do 1 assumption. So I'm going to do a 10-year analysis, and I'm going to do 1 assumption. I'm just going to make some better assumptions here. So if you saw in the analyst estimates, they're expecting mid-teen growth for the next 4 or 5 years. So I don't think 10 years at 20% is reasonable. What I'm going to call it is, I'm going to sit there and say it's 12%. Profit margin, now it's getting better. 8% in the last 10 years, 11.5% in the last 5, 13% last year. I'm going to call this, which is still high for a car company, 12.5%. Now, free cash flow, I'm going to call it the same thing, because even though it's struggling here, I think it's because they're investing so much in growth. So I'm going to focus on earnings. I'm going to keep, in the long run, unless you think this is a fraud, in the long run, these numbers should be the same. Now, what PE to apply to this company? Guys, it's still a car company. They're very capital-intensive businesses. They require a lot of capital in order to grow and to make profit. But the market average is about 15. I'm going to say this is 18. You might sit there and say, Paul, that's crazy. That's my opinion on it. And that's the point of you guys getting it yourself. If you get the software, you get this tool to use on your own. This tool is used millions and millions of times every single year by our users. And we only have several thousand users. Not like we have 1 million users. This thing is used so much, it's incredible. And guys, I'm doing my 9% return, not because that's the return I want. I want to find my intrinsic value. And for me, 9 or 10%, that's what the market's going to do. That's the return I want on my discounted cash flow model. So I'm going to hit the analyze button. And guys, my price, I'm actually surprised, 116. Now, that means I'll get about a 9% return if I pay 116 for it. So for me, I'm going to wait to buy Tesla until it hits my price. Now, if you want to see the 33 stocks that I'm planning to buy and hold forever, click this video card in the top right corner. Thank you very much for your time.